I mean, the Saudis are a great example of poor foresight and strategic planning. The administration was very tough on the Saudis, and yes, the murder of Jamal Khashoggi was an abomination. But at the other, on the other hand, if you're going to end up needing them and asking them for help, maybe you should have think about how you approach them in the first place.
And the Saudi Kingdom, Saudi Arabia, reportedly considering accepting Chinese currency instead of U.S. dollars for its oil sales to China. This would be a huge change. For almost 50 years, Saudi Arabia has traded oil exclusively in U.S. dollars, and that has been a massive boon to the United States.
What if the world's biggest oil exporter suddenly stopped using the U.S. dollar? What if the petrodollar, the very foundation of America's global economic dominance, began to crumble before our eyes? Reports emerging from Riyadh suggest that Saudi Arabia, long seen as a bedrock of the dollar-based oil trade, is quietly experimenting with selling oil to select buyers in Chinese yuan. And the most shocking part? It's not China forcing this change. It's Washington's own policies that might have pushed Saudi Arabia to this point. The Biden administration's handling of trade tariffs, oil diplomacy, and the U.S.-Saudi relationship may have triggered one of the biggest shifts in modern financial history, the slow but real unraveling of the petrodollar system. The Biden administration, critics argue, has mismanaged American leadership abroad, choosing pressure over partnership and punishment over diplomacy. Now, Saudi Arabia, a cornerstone of U.S. influence in the Middle East, seems to be saying, enough is enough. For decades, the deal was simple. The U.S. guaranteed Saudi Arabia security, and in return, the Saudis sold oil in dollars, reinforcing America's global financial dominance. But that handshake is now weakening thanks to tariffs, public scolding, and shifting alliances. To understand how we got here, let's rewind. Back in the 1970s, the petrodollar system was born. The U.S. struck a quiet deal with Riyadh. Every barrel of Saudi oil would be priced in dollars. In exchange, the U.S. offered military protection, weapons, and political backing. The system gave the dollar unparalleled demand and cemented America's financial supremacy for half a century. But over the past decade, that balance began to tilt. First came the America First era. Donald Trump's push to pull the U.S. out of multilateral trade pacts, impose tariffs on allies, and focus inward. While that approach resonated with domestic voters, it left foreign partners, especially Saudi Arabia, wondering whether Washington was still a dependable friend. Then came Joe Biden, who entered office promising to recalibrate the U.S.-Saudi relationship. But instead of rebuilding trust, Biden's team chose confrontation, publicly criticizing Crown Prince Mohammed bin Salman over human rights, pausing arms sales, and even labeling Saudi Arabia a pariah. Riyadh's response was subtle but strategic. Diversify. No open confrontation, no angry speeches, just quiet moves toward alternatives. Remember 2017? When President Trump made his first foreign visit to Riyadh, the glowing orb, the grand reception, the $110 billion arms deal? It looked like a new golden era. But behind the scenes, tensions were simmering. Saudi officials were frustrated that U.S. tariffs on steel and aluminum were hitting Gulf-related industries. The message they received was clear. America first, everyone else second. By 2021, the atmosphere had flipped. Biden refused to meet MBS directly for months. When oil prices spiked after Russia's invasion of Ukraine, Washington begged Riyadh to increase production. The Saudis said no. And that's when the unthinkable began. Reports surfaced that Saudi Arabia was considering accepting Chinese yuan for oil sales to Beijing, a symbolic but deeply consequential move. This isn't a sudden divorce. It's a careful, incremental realignment. China, through its Belt and Road Initiative, has spent over a decade building deep ties across Asia, Africa, and the Middle East. It has invested in Saudi infrastructure, telecommunications, ports, and energy projects. Beijing now buys nearly 1/4 of Saudi oil exports, more than twice the volume the U.S. buys today. That trade imbalance created leverage. Chinese officials proposed something bold: settle oil contracts in yuan instead of dollars. At first, it sounded impossible. But then came the pilot projects quietly approved, limited in scope, but revolutionary in meaning. Some contracts, reportedly under experimental terms, allowed payment in digital yuan, using Chinese central bank mechanisms to bypass dollar-based settlement systems entirely. Saudi financial teams have even explored how to diversify reserves into non-dollar assets, while local banks test swap lines linked to China's monetary network. This isn't just about oil. It's about creating an alternative ecosystem, one where Washington's financial reach is no longer absolute. Let's look at the numbers. According to recent trade data, Chinese exports to the United States have dropped significantly, down almost 14% year-over-year in late 2024. But exports to Saudi Arabia, the UAE, and other Gulf countries have grown sharply. Meanwhile, U.S. exports of energy products to Asia, especially liquefied natural gas and beef, have fallen due to tariff retaliations and diplomatic freezes. In September 2024 alone, U.S. beef exports to China fell by nearly 30%. These numbers show a clear trend. Trade is rerouting around Washington. And as trade patterns shift, so does the currency used to settle them. Each yuan-based oil transaction chips away at the dollar's supremacy, slowly but steadily. The U.S. tariffs, meant to protect domestic industries and pressure rivals, have instead pushed partners toward competitors. Saudi Arabia is not choosing China in a dramatic break. It's hedging its bets. The more Washington weaponizes the dollar through sanctions, tariffs, and political conditions, the more countries seek an escape hatch. For decades, the dollar's dominance seemed unshakable. But dominance breeds dependency, and dependency breeds resentment. Saudi officials no longer want to be dependent on one financial system, especially one that can be used against them at any time. And when you combine that with America's inconsistent foreign policy, from Trump's transactional style to Biden's moral posturing, it's no surprise that Riyadh decided to explore new options. China saw the opportunity and moved quickly. It offered something Washington no longer does: predictable, pragmatic partnership. Through the Belt and Road Initiative, China financed billions in Gulf infrastructure. Huawei built Saudi Arabia's 5G networks. Chinese companies constructed solar farms and high-speed rail. And then came the financial element. Beijing encouraged local oil producers to list bonds in yuan, offered settlement mechanisms through the Shanghai Petroleum and Natural Gas Exchange, and supported the creation of cross-border digital yuan infrastructure. Each of these moves, taken individually, might seem minor. But together, they form the backbone of an alternative system, one that no longer needs the dollar. If this trend continues, the consequences for the United States could be enormous. First, the global demand for dollars could weaken. That means fewer countries holding U.S. Treasury bonds, less cheap borrowing for Washington, and a higher cost of debt. Second, the symbolic loss. For decades, the petrodollar has been a quiet engine behind American power, forcing every nation to keep reserves in dollars just to buy oil. If major exporters like Saudi Arabia, Russia, and even the UAE begin accepting alternative currencies, that engine sputters. Third, geopolitical leverage. Without the dollar's dominance, U.S. sanctions become less effective. Financial tools that once froze adversaries' assets could lose their bite. And that means Washington's ability to influence global behavior through its economic system diminishes. In short, the U.S. risks becoming one player among many, not the indispensable nation it once was. And it's not just about oil. In February 2025, Washington imposed another round of tariffs, targeting foreign steel, autos, and renewable technologies, measures that directly hit Saudi suppliers and investors tied to joint U.S. projects. Riyadh saw it as another sign of disrespect, another moment where U.S. politics came before partnership. Within weeks, Saudi negotiators were spotted in Beijing and Seoul, exploring multi-currency frameworks for energy trade. By October 2025, a partial détente was reported. After a tense summit in South Korea, Washington agreed to roll back about 10% of the new tariffs, hoping to cool tensions. But by then, the message had already sunk and the world's largest oil producer had options. Let's be clear, the dollar isn't disappearing tomorrow. It's still dominant, still trusted, still backed by the world's largest economy and deepest capital markets. But dominance isn't the same as invincibility. And what we're witnessing now is the beginning of a post-dollar conversation, one that Washington can no longer ignore. The dollar once ruled the world through oil, but that era may be ending. As Saudi Arabia turns toward China and the Yuan gains ground, one question remains. How will America respond? The world is changing faster than anyone expected, and this story is far from over. If you found this breakdown insightful, don't forget to like, share, and subscribe, and let me know in the comments. Is this the end of the petrodollar, or just another test of U.S. power? Thanks for watching, and I'll see you in the next video.